Greetings, listeners of Stock Explorers, and welcome. Today we're doing a deep dive into ADMA Biologics. It's a company that, well, a lot of potential investors are taking a look at right now.
Exactly. And our goal today is pretty straightforward. We want to break down ADMA Biologics, explain what they do, and really highlight the key things you, as a potential investor, should know.
Yeah, we'll look at the good, the bad, try to weigh things up.
And pinpoint those, future milestones you'll want to watch. We'll aim for a clear, engaging discussion, use some examples, but keep it insightful and fairly formal.
Okay, let's jump right in then. So ADMA Biologics, what's their main thing? It's plasma-derived therapeutics.
Right. Basically, they take donated blood plasma and they process it to extract specific proteins, antibodies really, to create treatments.
And their key products right now are ASCENIV and BIVIGAM. Both are immunoglobulins, or IGs.
What's kind of unique about ADMA, or at least a major strength, is their business model. It's vertically integrated, meaning they control, well, pretty much the whole chain. They collect plasma themselves through their own centers, plus they have agreements with third-party centers here in the U.S.
Okay.
And then they take that plasma and do the manufacturing, the purification, everything in their own facility.
So from donor arm to finished vial, basically. That gives them a lot of control, I imagine.
It really does. Control over supply, over quality,
Mm-hmm.
which is a big deal in this space. So let's maybe unpack their products a bit more, starting with ASCENIV.
Right. ASCENIV. It's approved for something called primary humoral immunodeficiency, PI for short. Affects adults and adolescents.
And PI, just for context, it's essentially a condition where your immune system is weak, making you prone to infections.
Yeah. Now, what makes ASCENIV stand out is how it's produced. They don't just use any plasma.
No, there's specifically screened donors and select plasma that has high levels of antibodies against certain respiratory pathogens, like RSV, respiratory syncytial virus.
Ah, okay. So it's targeted.
Yeah, exactly. It's a more specialized approach compared to standard IV, which has a broader mix of antibodies.
And this targeted approach could be particularly helpful for PI patients who maybe haven't responded well enough to the standard IV of treatments.
That's the idea. For patients refractory to standard therapy, ASCENIV might offer an edge because of those concentrated antibodies.
And there's data to back that up.
There is some real-world data, actually.
Yeah.
One study over a year showed patients on ASCENIV had 0 serious bacterial infections, 0, and 0 PI-related hospitalizations. Those are pretty compelling results.
Wow. Yeah. You hear stories too, right? Like someone's struggling with infections constantly, then they start ASCENIV and can actually go back to work, or a kid can play sports again.
Those anecdotes really drive home the potential impact. Now, because of this specialized process, ASCENIV does have a higher price point.
Makes sense.
But there are mechanisms to help with access and reimbursement. Things like transitional pass-through status, specific billing codes, basically ways the system acknowledges its unique value.
Which is crucial for patients and, well, for ADMA's bottom line too.
Absolutely. And you see that reflected in their revenue. As of, I think it was Q3 2024, ASCENIV was already generating over half their total revenue.
Over 50% already.
Yeah, and that share is expected to grow. Plus, there's apparently a patient waiting list for ASCENIV, which signals pretty strong demand.
That's a good sign.
And feedback from doctors and patients seems positive too, regarding effectiveness and tolerability. One point often mentioned is that it doesn't contain sucrose.
Why is that important?
Some other IVD products do contain sucrose, and it's been linked in some cases to kidney problems. So being sucrose-free is a plus.
Got it. And they're looking to expand its use.
Yes, they're aiming for a pediatric label expansion. They've filed the application, an SBLA, and a decision or potential approval is expected sometime in the first half of 2026. That could open up a significant new patient group.
Okay. Now, what about BIVIGAM? Also for PI.
Also for PI, yes, but with a slightly broader age range approval down to age 2. It's been on the market longer than ASCENIV.
Right. But there was an issue recently. A recall.
There was. In the first quarter of this year, 2025, they did a voluntary recall of a few specific lots of BIVIGAM due to some reports of hypersensitivity reactions in patients. Now, this did have a financial hit.
How much?
Around $3.8 million in customer credits they had to issue. ADMA has characterized it as a one-off, isolated event.
Okay, important context. And no recalls for ASCENIV.
Correct. No voluntary recalls of ASCENIV have been reported. That's a key distinction.
Good to know. So that BIVIGAM recall, it impacted their recent financials, right? Not Q1 2025.
Yes, it did. And Q1 financials were, well, a bit of a mixed bag on the surface.
How so?
The headline numbers, earnings per share at $11.10 and revenue at $114.8 million, actually missed the consensus analyst estimates.
Uh-oh. Not what investors like to see.
No, but you have to look a bit deeper. Year-over-year revenue growth was still very strong, reported at 40%.
Okay, that's solid.
And if you adjust for those withdrawn Bivigam lots we just mentioned, the growth was closer to 45%.
Right, accounting for the recall impact.
Exactly. And other metrics look good too. GAAP net income was up 51% year-over-year. Adjusted net income up 87%. Adjusted EBITDA saw a big jump too, up 81%.
So underlying growth seems pretty robust despite the headline miss.
That's what those figures suggest, yeah. The underlying business momentum seems strong.
So what explains the miss then? The recall was part of it.
Definitely, that $3.8 million hit. But also, ADMA consciously increased spending in Q1
On what?
on medical education, promotion, really pushing physician and patient awareness, especially for ASCENIV. That's an investment in future growth, but it does impact near-term profits.
Okay, makes sense. Anything else affecting Q1?
Yes, something important related to their manufacturing. They're implementing a new, more efficient production process, a yield enhancement.
Ah, the yield enhancement. We'll come back to that.
Right. But to get FDA approval for it, they had to run validation batches, what they call PPQ lots, 3 lots, 2 Bivigam, 1 ASCENIV. And ADMA took a very conservative approach. They decided not to include any potential revenue from these specific lots in their Q1 results, or even in their full year 2025 guidance.
So they produced product but didn't count it towards revenue yet. That would definitely contribute to a miss against expectations if analysts hadn't fully factored that in.
Precisely. It's a cautious move. Probably reflects confidence in the new process long-term, but it impacts the near-term reporting.
So how are they managing that dip? Just selling older stock first?
That's the plan. Sell through the existing inventory before the product made with this higher yield process hits the market more broadly. The real financial benefit of this yield enhancement, they're saying, will mostly show up in 2026.
Got it. So looking ahead, their revenue growth strategy seems to lean heavily on a sign of demand.
Strongest sign of demand, yes. Plus, increasing their plasma supply, continuing those education efforts you mentioned.
Leveraging that shift towards ASCENIV, which has better margins, right?
Exactly. That product mix shift is already helping profitability. You saw that in the Q1 gross margin, 53.2% reported, almost 55% adjusted. That's a healthy margin and trending up.
And their guidance reflects this optimism.
It does. They're projecting over $500 million in revenue for the full year 2025.
Okay.
And then $625 million for 2026.
What's driving that jump from 25 to 26? Still ASCENIV.
ASCENIV is key, yes.
Yeah.
But also securing more plasma. And crucially, that yield enhancement process really kicking in during 2026.
Right, the 20% increase. Let's talk about that yield enhancement more. FDA approved it.
Yes, FDA approved. It allows them to get about 20% more finished IG product from the same volume of starting plasma.
That sounds like a pretty big deal for efficiency and costs.
It is, potentially. It should lower their per-unit manufacturing costs quite a bit and significantly expand profit margins.
When do those benefits really start showing up?
They expect to see some initial impact late in 2025, but the major acceleration, the big margin improvement, is really anticipated throughout 2026.
Okay, and longer term, they have bigger goals.
Much bigger. They've raised their long-term target to $1.1 billion or more in annual revenue sometime before 2030.
Wow. $1.1 billion. Driven by...
Again, ASCENIV is central, plus the full impact of the yield enhancement, continued plasma supply growth, and potentially contributions from their R&D pipeline. They have a candidate called SG001 in development.
Now, you mentioned they missed Q1 estimates, but what's their track record like with guidance generally?
That's an important point. While they missed the quarterly consensus this time, ADMA actually has a history of raising their annual revenue guidance over time. They've often ended up beating their own initial projections for the year.
So maybe more conservative initially than raising the bar. Interesting. What about margins long term?
Well, we saw the Q1 gross margin over 50%. Their target for 24-25 was in the 40-50% range, so they're already potentially exceeding that.
Right.
And for adjusted EBITDA margin, they're aiming for around 46% this year, 2025, with a longer-term goal of hitting roughly 50% by 2030.
Okay. And just to confirm, that $3.8 million Bivigam credit was the main one-time type item hitting Q1 25.
Yes, that was the primary unusual expense highlighted for that quarter.
Okay, let's dig into the production side a bit more. That 20% yield increase is from the new process. How does that work with their existing facility?
Their main facility in Boca Raton has a capacity to process up to 600,000 liters of plasma annually. The yield enhancement doesn't change the input capacity, but it increases the output they get from those 600,000 liters.
Makes sense. More bang for the buck from the same facility footprint. Are they planning to expand the facility itself?
The materials we looked at didn't detail specific plans for physical expansion right now. The focus seems squarely on maximizing the current facility's output via this new process improvement first.
And the plasma supply to feed this, you said they've increased access?
Significantly. Through deals with third-party collection networks, they now have access to plasma from roughly 250 centers, on top of their own ADMA biocenters.
Are those new centers up and running?
Reports suggest most of them are operational now, yes. And importantly, ADMA stated they're currently collecting more plasma than they had forecasted.
That's crucial. De-risks the growth plan if the supply is already exceeding expectations.
Exactly. Having that robust plasma supply locked down is fundamental.
Of course, plasma collection isn't without risks, right? Reliance on donors, regulations, quality control.
Absolutely. It's a complex supply chain. Donor availability, potential disruptions, strict regulatory oversight, logistics, these are always factors. But their U.S.-based model and expanded network seem designed to mitigate these risks as much as possible.
Okay, shifting to the market. How big is the opportunity here?
It's substantial. The U.S. market for IVIG is measured in the billions of dollars and is growing steadily. Same for the overall market for treating primary immunodeficiency.
We talking solid growth rates.
Yes, consistent mid to high single-digit CGR, sometimes higher depending on the segment. So ADMA's target of $1.1 billion by 2030, while ambitious, is within a large and expanding pond.
Especially with ASCENIV targeting that potentially underserved niche of refractory PI patients.
Precisely. That differentiation is key. Now, it's not like they have the market to themselves.
No, definitely not. Who are the big players?
You've got major global companies, Takeda, Grifols, CSL Behring, Octa Pharma. Even Pfizer and Kedrion are in the broader immunoglobulin space. Competition is fierce.
So ADMA's new strategy with ASCENIV is really their angle.
It seems to be their main competitive lever, yes. Focusing on ASCENIV's unique properties and the specific needs of those harder-to-treat patients.
Okay, so pulling this together, what are the absolute key things investors should keep an eye on going forward? The main milestones.
All right, number one, definitely track the rollout and impact of that yield enhancement process. We need to see if it delivers the expected margin improvements, especially starting late 25 and through 26.
See the proof in the number.
Exactly. Second, watch how well they manage inventory, selling down the older stock and smoothly transitioning to the higher yield product.
Inventory management, okay.
Third, continued ramp up of plasma collections. Are they sustaining that better than forecasted trend?
Supply needs to keep pace.
Fourth, the FDA decision on ASCENIV for kids. That H1 2026 timeline is important.
Pediatric expansion, got it.
Fifth, any news on their R&D pipeline, like SG001. Sixth, and this is crucial, their performance against guidance. Can they consistently meet or beat their own targets?
Building back that predictability after the Q1 miss.
Right. Seventh, just tracking ASCENIV sales growth and market reception. Is it continuing to gain traction?
Market adoption.
And finally, keep an ear out for any further regulatory issues like recalls, though hopefully the BIVIGAM one was isolated. And look for more published data on ASCENIV's benefits. Health economic data is always influential.
Okay, that's a good list. Let's try to boil it down then. Positives for potential investors.
Okay, positives. Strong revenue growth, particularly ASCENIV. Improving profitability, gross margin, net income, EBITDA are all trending up. ASCENIV itself is a unique, differentiated product with proven benefits and high demand that waiting list is telling. The FDA-approved yield enhancement offers significant margin upside. They've secured much better plasma supply. Management has a history of raising guidance. It's a large, growing market. And there's the potential pediatric label expansion for ASCENIV plus those ambitious long-term targets.
Seems like a lot on the plus side. What about the negatives or risks?
Well, the recent Q1 miss on earnings and revenue is a negative, creates some uncertainty. The BIVIGAM recall and its cost, even if non-recurring, raises questions about quality, control, consistency, though ASCENIV hasn't had issues.
Competition.
Fierce competition, absolutely. And their success really hinges on executing these strategies. The yield enhancement has to work as planned. The plasma supply needs to remain robust.
And there's a lag before that yield enhancement fully kicks in financially.
Yes, investors need patience for that benefit to materialize fully in the numbers, likely mostly in 2026 and beyond.
So wrapping up for our Stock Explorers listeners, ADMA Biologics looks like, well, a potentially interesting story, wouldn't you say? There's clear growth driven by ASCENIV and this yield technology.
I'd agree. There's a compelling growth narrative here. The fundamentals seem strong despite recent bumps. The potential, particularly with ASCENIV and the yield enhancement, is definitely there.
But execution is key.
Execution is everything. Potential investors really need to watch those milestones we laid out: the yield impact, plasma collections, meeting guidance. Those will tell the tale.
Absolutely. Well, thank you for joining us for this deep dive. We hope you found this breakdown of ADMA Biologics useful.
If you did find it informative, please do consider subscribing to Stock Explorers. Maybe give us a like and hit that notification bell so you don't miss our future analyses.
Until next time, keep exploring the world of investment.